bank for taking ta'wid. Islamic banking institution can recognize ta'wid as income on the basis that it is compensation for actual loss incurred by the Islamic banking institution. So actual loss. And this actual loss is not to be determined by the bank itself. It is actually regulated by the central bank. So it's not like arbitrary. The Islamic bank say my loss is this, so you have to pay this. No, it has to be regulated and approved by the central bank. And so far, central bank has approved the 1% ta'wid rate, and also the Islamic interbank money market rate for delay after maturity of the financing. Okay, so that's one. The whole idea of ta'wid is to compensate for actual loss. The second one, gharama. The whole idea of gharama is penalty to deter. It is not because of compensation or anything. The whole thing about it is to penalize the customer who deliberately defer the payment or delay the payment. But the amount of penalty cannot be recognized as income of the Islamic financial institution, but should be channeled to identified charitable bodies. So the whole idea of gharama is just to deter. Okay? So that is the two types of additional charge that can be allowed in Malaysia on the basis of this ruling. Apart from that, if you charge additional, it is still considered as riba, which is prohibited. So only two are allowed: compensation for actual loss incurred by the bank, and penalty that will be channeled to charity. And this would be applicable to the customers who are actually delinquent, did not pay, although they are having the ability and means to pay. Okay? Clear? Okay. Now another interesting thing is actually when we look at all the rules, I think it is fairly clear that when you extend the time, you cannot charge extra. And we have seen attempts by financial institutions for one reason or another to actually try to capture an additional income from the extension of the delay. Okay? The rule says you cannot extend and charge extra. But people still want to find mechanism to try to get extra when they extend the time. Because the whole argument by the banks is we have costs. At every minute that passes, there's cost. Okay? So that's the argument. So that's why we see attempts to what they call try to restructure the debt obligation by rolling over of the debt. Okay? And by rolling over the debt, they want to charge extra. Okay? So this is known in the Islamic literature as qalbuddain. Qalbuddain, or rolling over the debt. And this term of qalbuddain actually is a terminology attributed to the later Hanbali jurists, particularly to Ibn Taymiyyah and Ibn Qayyim. For example, I've quoted here in Turuq al-Hukmiyah, Ibn Qayyim was reported to have said, when the usurer used qalbuddain and said to the debtor, either you pay or you add on the debt and time period. Okay? So this is one example of qalbuddain, roll over of debt. You tell your debtor, you pay now, settle, or the time is extended and the amount of debt is increased. So this one is clearly prohibited because this is actually riba. And another terminology of similar meaning with qalbuddain, rolling over of the debt under the Hanbali school, there's another terminology used by the Maliki jurists known as faskhuddain fiddain. Faskhuddain fiddain, or the cancellation of one debt in another debt. Okay? And this, for example, you can see in the writing of Al-Kharshi in Sharh Al-Kharshi Al-Khalil. It says the faskhuddain fiddain is to cancel the obligation of the debtor in return of more of the same genus at a future or extended period, such as 10 is cancelled for 15. Okay, you have $10 for obligation, it's cancelled, but you have to pay 15 for a later time, for an extended time. Okay, so this is examples of the terminologies used in the old literature, rollover of debt, either as qalbudain or fasqudain fidain. And Dr. Nazir Hamman in his paper identified 5 forms of qalbudain, 5 forms of rollover of debt. And I will discuss this in the following 2 slides. And according to Dr. Nazir Hamad, 2 of these rollover are allowed. Sorry, 2 are not allowed. There's a mistake there. Sorry, 2 of these are not allowed, and 3 are allowed. So you have to correct your slides. 2 of these rollover are not allowed according to Nazir Hamad, and 3 are allowed. Okay. The 2 types of qalbudain or rollover of debt that are not allowed according to Nazir Hamad is 1. Extension of time for payment of debt with additional charge. Okay, the one mentioned by Ibn Qayyim and the one mentioned by Al-Kharsi. You have $10 debt, you cancel debt, and then have another one $15 for extended period. Okay, so you extend the time with additional charge. So this is not allowed. This is considered as the prohibited riba, riba al-jahiliyah by ijma'. The other one is you extend the time for payment of debt with additional amount payable, but this additional amount is achieved via a legal device, apparent legal device, hilah zahirah, apparent legal device. For example, you enter into a contract or contracts that were not intended to in the first place. So these contracts are fictitious, but you enter it in order to get the additional price. One example given by the writer is like, okay, A owes B $50, for example. A owes B $50, and the time to pay is already due. Okay, now A wants to extend the time, so B agrees to extend the time. Normal extension, you cannot increase, right? The debt is just 50. Now what they do is basically B tells A, okay, I'll buy this asset from C at his shop. I'll buy what should I buy? A book, for example. I buy a book from C in his shop, and I'm selling this book to you on murabahah basis, and you're going to pay to me the price of the book after 1 month. Okay, and then A agrees. So B then buy the book, sell to A the book for $60 payable over 1 month. Okay, so the 50, okay, now dollars is considered as cancelled. So now A has to pay B $60 for the price of the book. Okay, so this is actually considered as still hilah. Okay, and according to Nazir Hamad, according to him, it's still not allowed. Okay, because you are extending the time and you have additional amount payable, and you achieve this via the contracts that were not intended to in the first place. Okay, so that was his view. Okay, are you clear? The second type. Okay, this is the second type of qalbudain according to Nazir Hamad, which according to him is not allowed. The third type of qalbudain or rollover of debt, which according to Nazir Hamad are allowed, 3 others. Sale of debt by the creditor to the debtor for a deferred price of a different genus. Okay, bai'ud da'in dainahu lil madin bi thamanin muajjal min ghairi jinsih. Okay, basically if the creditor have $50 owing from the debtor, okay, then you extend the time another month, but the debtor is going to pay to you not the $50, but a consideration other than money. Okay, it can be by way of handphone. Okay, so you pay to your creditor by a handphone, by giving a handphone after 1 month. Okay, and that handphone is deferred lah, okay, but not in the cash. So that handphone has its own value depending on the market price or how much. That is relative lah, but you have agreed that the debt is considered paid by the debtor paying to the creditor by using the handphone, for example. Okay, so you are paying using a different asset, not money. If your debt is in form of money, you are paying with a different type of asset. Okay, so that is the one type of rollover. Okay, and this one, according to Nazir Ahmad, I think this is okay, this is permissible. Of course, he has his arguments and there are views against and for this type of arrangement, but he favors the one allowing for this type of arrangement. The second one, the creditor converts his debt into the capital of a salam purchase from the debtor in consideration of the salam goods to be delivered to the creditor by the debtor at an agreed and specified time in the future. Okay, so an example, I'm not sure whether you can still follow the example. It's easier to write on the board. So basically in this example, the similar example, A owes B $50 and then they want to extend another month. Okay, so now B tells A, okay, instead of this $50 becoming a debt that you owe to me, now let's convert this $50 into a salam price. As good as I'm paying to you $50 to pay for the price of what? 10 kilos of rice, for example, 10 kilos of rice to be delivered by the person at the agreed future date, basically after 1 month. So you are extending by 1 month. So comes the end of the 1 month, the debtor now will have to deliver to the creditor 10 kilos of rice, for which the price is considered paid. So you convert the debt into salam price. Okay. Are you still following? Okay. Again, this one is subject to differences of view among the scholars, but Nazir Ahmad preferred the view which allows this type of rolling over of the debt. You convert the debt into salam capital. Okay. The third type of rollover of debt which Nazir Ahmad preferred to be considered as allowed is the creditor exchanges his debt with usufructs of a specific asset owned by the debtor for a specified period of time. Okay, so similar example, A owes B $50. Okay, so they extend 1 month or 3 months. Okay, 3 months. So in exchange of the $50 debt, okay, the debtor will give the creditor the right to use of an asset, his car, for example. So you use my car for 3 months, and that is considered as payment of the debt. Okay, so use of the asset owned by the debtor for a specified period of time as payment or in exchange of the debt. Okay, so that is the third type of rolling of the debt. You exchange the debt with usufruct of an asset owned by the debtor. Okay, so those are the 3 types of rollover of the debt which Nazir Ahmad says, in his view, allowed. Okay, and he also suggested another solution, which is not actually considered by him to be like a rollover of debt, but can be a solution for a debtor having financial difficulties and wanted to restructure and extend the payment of the debt. So this solution involves third party actually. So the debtor can get liquidity or cash facility from a third party, and according to Nazir Ahmad, this third party must not be the original creditor. In return of a deferred consideration, so this can be via tawarruk or other syariah compliant contracts, in order to pay for the original debt. Okay, so it's more like refinancing. You go to another creditor, do commodity murabahah, for example, get the cash and pay off your original creditor. Okay, And this is the view of Nazir Ahmad with regards to the 5 types of colbodine, and the last one, his suggested solution. Okay. And if you compare the views given by Nazir Ahmad with the resolution by the Syariah Advisory Council of the Bank Negara, they have actually had a number of resolutions, a few resolutions on restructuring, rescheduling of Islamic financing. So in June 2002, in meeting number 26, the SAC had decided that the proposal to execute rescheduling and restructuring agreements for Islamic financing with cross-reference to the original agreement for the purpose of stamp duty exemption is allowed, provided that they are executed after the original agreement has been cancelled. And in the case of restructuring, SAC allowed the cross-reference mechanism on the basis of maslahah to avoid double stamp duty. So this is particularly in reference to a query from the industry that they want to do a rescheduling and restructuring agreement, but they don't want to be asked to pay another series of stamp duty. Okay, so they want to have cross-reference to the original document so that they will not be imposed with double stamp duty, and this was allowed by the SAC. Okay, so it doesn't go into detail what are the restructuring agreements. Okay. The second one is, I think, perhaps a bit on the restructuring agreement. So in February 2003, the SSC said, based on mutual consent in the agreement, the period of financing can be extended without entering into a new akad, provided that both parties perform all their promises and the price imposed on the customer is not more than the originally contracted selling price. Sorry, this one is more on rescheduling. You can extend the period, but you do not, you cannot impose more price. The price is still according to the originally contracted selling price. It should not be more than the originally contracted selling price. You can just extend the period. You don't have to enter into any new contract, as long as the price is still the original one and you're not increasing the price. But this one is a bit different. It's about restructuring by way of refinancing with the same financier. You enter into a new contract with the same financier in order to pay off the previous one. It's like rolling over of the debt with the same financier. So the SSC said that the settlement of financial obligations through the issuance of Islamic debt securities to the original financier is allowed. However, the mechanism for rescheduling and restructuring must be implemented according to Sharia compliant requirements, such as existence of clear akad, Sharia compliant assets in the sale and purchase, and other terms and conditions in the sale and purchase that are not contrary to the Sharia. So on the basis of this ruling, then we can see that you can have community murabahah, for example, with the financier in order to pay off your previous financing with the same financier. So this is different from the view preferred by Nazir Ahmad earlier. Because Nazir Ahmad said you can have, but with third party, not with the original creditor. So this is where I think the SSC is different from Nazir Ahmad's preferred view. And the reason given by the SSC is because the new contract with the original financier are considered as separate and independent contract. So parties can enter into multiple independent contracts amongst themselves. So you have entered into one contract before. If you want to enter into a new contract with the same financier, you can. Okay. So the SSC is treating those two contracts as independent and separate. Whereas Nazir Ahmad seems to look at those contracts as having relation, because you're trying to roll over the old one by having the new obligation under the new contract. Okay. And before we end, I will just touch a bit on the restructuring for lease-based financing, default and restructuring for lease-based financing. So we have looked at debt-based. So we're talking about lease-based. The main difference between lease-based and the sale-based that we have seen earlier, in lease-based financing, the financier still owns the lease asset. So lease asset still owned by the financier. So in terms of obligations in the ijarah financing that the customer have with the bank, the customer have debt obligation if there are rental in areas. Okay, talking about leasing, there are rentals. If the rentals are in areas, there is also debt obligation. At the same time, some ijarah financing involve purchase undertaking by the customer to buy the asset at a pre-agreed exercise price. So if you have this purchase undertaking, there is obligation on the part of the lessee to exercise this purchase undertaking. So when there is default, then the bank can actually recourse on the lessee for the rental in areas, similar with the debt-based financing. So the rule of debt lah, the rental in areas are debt. So you can recourse to the lessee to get the debt, and the same rule with regards to debt-based financing that I've discussed earlier would apply here. The second recourse is the lessee, the financier as lessor can exercise the purchase undertaking, can tell the lessee, now you should purchase the asset. Okay, that's another option. Or the lessor or financier can have recourse on the lease asset itself, repossess the lease asset and sell in order to recover whatever that you can. So that is in terms of default. In terms of restructuring, relatively speaking, ijarah financing is easier and more flexible to restructure because the lessor and lessee can just agree mutually to extend the lease period and revise the lease rental together. So we just have a mutual agreement, okay, let's extend further 1 year and let's revise the rental. You can have that. Okay, no problem with lease contract. And finally, on the equity-based financing, using mudarabah, musyarakah, wakalah bil-istismar, the main issue that arises is the nature of obligation of the customer. You have financing of the customer using mudarabah, musyarakah, wakalah bil-istismar. So if you look at the case of Bloom Bank and Investment Dar, Bloom Bank gave the money to Investment Dar on the basis of wakalah bil-istismar, investment agency. And then Investment Dar failed to pay the expected profit. Okay, so the issue here is the failure to pay amounting to default. Does it amount to default or not? Failure to pay the expected profit. There are two scenarios. There's no profit made by the project, or there's profit made but the agent is withholding the profit. In that situation, of course, there's default. But if no profit made, you suffered loss, the project suffered loss, is there an event of default? Okay, so basically there's no indebtedness and possibly no event of default. There may be termination event. It can cause the parties to terminate the agency or the mudarabah or musyarakah, but it's difficult to establish a default event. Okay, so basically when you want to restructure, as you can see, it's not debt restructuring because there's no debt obligation. So there are a number of options that you can look at. Conventionally, you talk about debt for equity swap. Okay, but for this one, obviously, it's equity for equity swap. Okay, when you come in as a financier under mudarabah musyarakah, then you swap with the equity and become shareholder. Okay, that is possible. You can have project revision. Okay, you invest in the project, you can have revision of project, have new project plan with new duration, new profit share ratio. You may decide to sell some